Ladies and gentlemen, good day and welcome to Q3 FY23 earnings conference call of Elgi Equipments Limited, hosted by Asian Markets Securities Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. Actual results may differ from such expectations, projections, etc., whether expressed or implied. Participants are requested to exercise caution while referring to such statements and remarks. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kamlesh Kotak from Asian Markets Securities Limited. Thank you, and over to you.
Thanks, Yashasri. Good evening, everyone. On behalf of Asian Markets, we welcome you all to the 3Q FY23 earnings conference call of Elgi Equipments Limited. We have pleasure in welcoming Mr. Jairam Murugadosh, Managing Director, representing the company. I request Mr. Jairam to take us through an overview of the quarterly and 9-monthly results, and then we shall begin the Q&A session. Over to you, sir. Thank you.
Thank you, Kamlesh. Good evening, ladies and gentlemen. Thank you for taking the time out to be with us this evening. Like we normally do, I will take you through a reconciliation of our EBITDA performance compared to the Q3 of last year. So we grew sales by about 18%, and we improved on our contribution by about 3%. So effectively, we should have had an EBITDA of close to 1,500 million, and we posted an EBITDA of 1,120. So there's a gap of about close to like 3,000 million, 30 crores. So the main thing is we have to look at comparing to last year. One, the fixed costs were very, very low because we were still coming out of COVID and business was still conducted by and large virtually. There was very little travel by employees, very little travel. All other costs were low. That has changed progressively this year. Besides increased travel, the cost of travel has also gone up. So as a consequence, that has taken up quite a bit of our costs compared to it. But it's actually, when you go back to the pre-COVID, we are not in such a bad shape. Of course, employee costs have also gone up by virtue primarily of increments because that was also subdued during the COVID period. And we have done some marginal headcount in different locations in the world. So nothing to be alarmed about. So overall, I think the profitability has been very good in this quarter at all levels of profit, whether it's at an operating profit level or at a contribution level, we've done well. Moving on to this number, the 18% growth is roughly 3% in volume, about 10% in price, and about 5% in exchange rate. That's really the contributing factor for our 18%. India, so I like I do, I'll start with Australia and work my way up west. Australia did better than the previous year, but there were some challenges with specific business verticals which are temporary, and we are hoping that in the last quarter we will do even better. Southeast Asia continues to be a challenge. Though they have done better than last year, they were really not anywhere near what we targeted the performance in that region. But we continue to pay attention to how we can improve our share there. Coming to India, we had a reasonably good run, but I think there are opportunities in India that we need to explore a little bit more deeply. There were some verticals that were absolutely dead, like our water well business. Our new product, which we launched about 3 years ago, has taken on very good traction in the market in terms of acceptability. Not just acceptability, but as a product preference over competitors. But the market has been literally dead. So that's something that we did not anticipate that it will be this bad. And it's still early days to say if and when this market is going to come back. On the profitability side, we have a railway business, which is contractual business. We get orders, we participate in tenders, and the orders are generally for execution over a year. And, we were stuck with legacy prices and current cost. So as a consequence, there was a compromise on margin. Nothing significant, but I'm just giving it as a overall assessment of the business. Europe continues to grow for us. We are aligned and in line with the overall strategic plan that we made for Europe. So it's been a positive experience on the top line. We are waiting for the coming year when we expect to see a significant shift in the volume, which will start changing the bottom line profile of Europe. North America was again a very strong performer for us. We continue to grow in that market. It's a little, both Europe and North America are a little bit of a conundrum for us. The published information or the press keeps talking about doom and gloom. In Europe, they talk about the war, they talk about the energy crisis, but we continue to grow there. And I believe that from whatever we have been able to glean out of our competitors' numbers, they've also grown. The same thing with North America, with the stated inflation and the threat of unemployment. In spite of all that, we are growing, and I believe our competitors are growing as well. So this is really the synopsis on and ATS, of course, has continued to do well this year, our automotive equipment business. So going on to the revenue mix, we continue to maintain 45% India and 55% rest of the world. That ratio continues to remain. The fourth quarter, we expect it to be as strong as the third quarter. We normally have very strong fourth quarter, like most companies in India. We're not sure, considering the way there is all these uncertainties and changes that are there, whether we will have that kind of a hockey stick in the fourth quarter, but we still believe it will be as good as the third quarter. As far as profitability is concerned, we expect that we will continue to maintain it. We don't see continuing improvement in the same trajectory, but we'll be able to maintain the current levels of profit. As far as CapEx is concerned, we had projected that our total spend will be about 50 crores, and we are still well within that. I don't think we will exceed that number for this year. Having said that, we are looking at building our longer term, bigger CapEx for moving our current facility from the city campus to our new campus where our new facilities exist. We haven't finalized the number. We hope that by the end of this financial year, we would have finalized that number, and probably during the next call, we'll give more details about what that would look like. So as far as the current cash position is concerned, with the sale of our property in South Boulevard in Charlotte, we have no debt in the books. Effectively, the net debt position is actually positive. So that's the situation as far as we are concerned on the cash side. So this is a kind of a summary for Q3, and we're happy to answer specific questions. Thank you very much.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Ravi Swaminathan from Spark Capital. Please go ahead.
Hi, sir. Congrats on a very good set of numbers.
Thank you.
Sir, my first question is with respect to the general demand scenario which is there in the domestic market. Are you seeing it moderating across industries? So basically, let it be industries, infra, your views on how budget can kind of trigger infrastructure-related spend and how it can benefit LG. So if you can talk about the India market, it will be really great.
Yeah. Well, except for a few verticals, not even a few specific verticals like spinning industry and textiles, which has really been challenged for the last year, we don't see any problems in any specific verticals or any slowing down. Enquiry levels continue to be healthy. In the earlier quarter, I had kind of expected that there will be, we kind of sensed maybe there is a bit of delaying of finalization and all that. We are not seeing anything of that nature at the moment. So the domestic market is running nicely. As far as the budget is concerned, one thing that is a big highlight for us is the huge investment in railways. We are a strong player in that segment, and we are waiting to see how how this budget is going to get translated into production of locomotives, which is really what our business is, which is what our business is linked to. So even though there will be some expenditure towards expanding the rail network, I think quite a bit of it is going to go towards rolling stock enhancement. So that would help our business. The general investment in infrastructure that the budget is talked about, we need to know the specifics. We don't know the specifics yet, but we are in the capital goods business, so any infrastructure build which requires capacity, we will be there. So we're quite optimistic that it will only contribute positively to our business.
Sir, what would have been the volume growth during this quarter in the India market? Any sense on that?
I don't want to go too granular on that, Ravi. I gave you an approximate at the aggregate level. We had told you the volume growth is about 3%.
Got it, sir. Thanks a lot.
Thank you. We have a question from the line of Vinod Shastri from Instanomic Ventures. Please go ahead.
Good evening, sir, and congratulations on the good set of numbers. Sir, two questions, sir. As per the earlier Concall, we discussed that Europe will come into the break-even or we will be profitable by FY23, and that was a very deliberate plan. Considering the opening up of the European economy, is there any chances that we will turn around before that? Is there any chance that we will be profitable over there?
No, I don't think, like I just explained to you in the preamble, we are on track to our original plan. Our original plan, as you might remember, got pushed back by a year pushed forward by a year due to COVID, and we are going along as per that revised plan.
Okay, sir. Then the one more thing would be, is there any chance that just during the results, is there any chance to provide a PPT which will be helpful for the investors actually?
Sorry, say that again. I don't know what you meant by that.
Just during the results, if there is a PPT which is released from the company, that it would be helpful for somebody to just go through what has just happened during that quarter.
Are you referring to a PowerPoint presentation
Yes,
which summarizes
yes, sir.
our sure, we'll do that.
Okay, sir. Then one more question will be, on the standalone basis, the margins were 19% versus 17.97, close to 18. And on a consolidated basis, it is 14.83 versus 15.25 quarter on quarter. And on the standalone side, these margins sustainable levels at this 19%?
You're talking about the EBITDA margin. What margin are you talking about?
EBITDA margin, sir.
Yeah, these are sustainable. Like I said, the fourth quarter, we expect performance to be pretty similar to the third quarter at the very least, right? Normally, the fourth quarter, there is a hockey stick, but I think considering the various economic conditions, we think it will be very similar to the third quarter. And which means both the top line and bottom line will be able to sustain it.
Thank you, sir. Thanks for the opportunity, sir, and good luck, sir.
Thank you.
Thank you. A reminder to participants to press star and 1 to ask a question. We have our next question from the line of R. Govindraj, an individual investor. Please go ahead.
Good evening, sir, and congrats for a good set of numbers.
Thank you.
Sir, in the results annexure, it was mentioned that we have some joint operations with Elgi, Balakrishnan Brothers. Can you throw some light on those? Which are the operations we have a joint with?
I don't know which one you're referring to. We don't have any joint operation with Elgi.
But in the notes to accounts it is given, sir.
The company is a partner in a partnership firm that is called Elgi Balakrishnan Brothers Firm. It's got nothing to do with Elgi Balakrishnan Brothers Limited.
Okay, yeah. Okay.
Yeah.
And regarding this, in the annual report of FY22, it is stated that we will sell all the non-core assets and monetize from them. So, sir, how much has been done and how much is left over, sir?
Well, we've been giving updates on that. We have sold our Ahmedabad office. We have sold our Bombay office. We sold our apartment in Bombay. We have sold our Delhi office. Earlier, 2 years ago, we sold our Chennai office. So, progressively, we are getting rid of all our non-core businesses, our non-core assets.
And any ballpark amount, sir?
Sorry?
Any ballpark amount, how much it will be reducing out of it?
I don't have the number in front of me.
Okay. And last question, sir. In the recently concluded Auto Expo, we have showcased some of our products for the automobile sector, that is wheel aligning equipments. Whether we are already in the business or it is a new venture, sir?
Oh, we've been in this business for more than 20 years, 25 years.
Okay. Whether this new business will replace the older one or it is just launched now?
These are new products that we display in an exhibition as part of our continuous improvement of our product range.
Okay, sir. Thank you, sir. I'll come on the queue, sir.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. We have our next question from the line of Harshit Patel from Equirus Securities. Please go ahead.
Thank you very much for the opportunity. Sir, my first question is on the pricing in the Indian market. I remember in the last call you had mentioned that you might have to roll back prices in some specific categories of product based on how the market behaves. So could you elaborate on how was the scenario in this particular quarter? Have you done any cutbacks on the pricing? And what do you see will happen in the next few quarters down the line?
No, we've not rolled back any pricing. We've held on to our pricing. We have realized that in the price discovery process, we have established a reasonably good relationship between the price and brand. So I think we are okay.
Sure. So you don't foresee a scenario where you might have to cut back on the pricing specific to the Indian market going ahead?
Not at an overall level. Pricing is a very dynamic thing that will continue to happen, but at an overall level, we don't see that happening.
So ideally, now that should flow into our gross margins, right? Because I think we have now by far absorbed almost all the raw material price inflation, right? So I think that should enhance our gross margins significantly going ahead.
No, that's what you're seeing in Q3 results. We can't expect more than this.
Okay, sure. So my second question would be on the European front. As you have mentioned, we should be able to break even in FY25. So what was our loss for the first 9 months of FY23?
I don't want to get into the detail of specific regions' performance because that's not good for the competitive situation. We have made an overall plan of a loss of 200 crores over a 5-year period that got pushed to about 6 years, and we are well on track to that.
Understood. And just last to check on the motors facility expansion. So are we on track to produce bulk of the motor requirements for our FY24 production?
Yeah, absolutely. We are.
Okay, perfect. That was all from my side. Thank you very much.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. We have a question from the line of Amit Anwani from Prabhudas Lilladher. Please go ahead.
Ma'am, your voice is very, very feeble. I don't know what the problem is. I don't know whether it's on my side or your side.
I'm sorry, is it okay now?
Yeah, far better. Thank you.
We have a question from Mr. Amit Anwani from Prabhudas Lilladher. Please go ahead.
Hi, sir. Thanks for the opportunity. Just wanted to understand the aftermarket business contribution for this quarter and how is our outlook with respect to aftermarket's contribution in, let's say, next year or a couple of years.
So our aftermarket contribution has two dimensions. One is aftermarket in India, which is our core, or I wouldn't say core business, but it's our largest market in terms of our tenure of presence. So we have a large installed base in India, and therefore there is a very attractive aftermarket revenue stream coming from that. That has consistently grown for us, and probably today we are at around 25-26% of our revenue coming from aftermarket. Is there room for further growth? Absolutely there is. But this is a very metered and very deliberate movement from where we are to where we could be. As far as the rest of the markets are concerned, the first strategy in this business is to create an install base, which is where we are right now. So it's a little premature to be measuring aftermarket in markets outside India. Having said that, it doesn't mean we completely ignore it. We keep a careful eye on it. We make sure that the installed base, share of our installed base is maintained so that when the installed base starts becoming bigger, we are able to extract the true value of that potential. Yeah.
Sure. Next question is on the geographical performance I might have missed. So I remember, I think from past H1 we were facing headwinds in Southeast Asia, Sri Lanka, Middle East. So your outlook on that?
Southeast Asia still, like I said in my preamble, it's still a challenge. It's an extremely price-sensitive market, but we have grown compared to last year. The potential is there. We are still trying to figure out what would be the most appropriate strategy for that region. But it's a very small percentage of our total revenue.
Right. Last question on the manpower cost. Is it better to assume this 144 crore quarterly run rate will continue till we break even in Europe, or this is likely to decrease?
Are you talking about the current employee cost, which is
Yes.
about 144 crores?
Yes, you're right, sir.
Yeah, that will continue to be at this level, and come April there could be a revision, which is normal. So that's what we expect.
Thank you, sir.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. Participants who wish to ask a question are requested to press star and 1 on their phone now. We have a question from the line of Vinod Shastri from Instanomic Ventures. Please go ahead.
Yes, sir. Just 2 follow-up questions, sir. Just wanted to know what is the R&D investments that we have made so far, and what is the progress on that would be the first question, sir.
R&D investment in value terms would be about 3 to 4% of our revenue in Indian rupee terms, but if you normalize it for global costs, it's probably 7 to 8% of our revenue.
Okay, sir. Is there any new product line that we are planning, any new products that we are planning, any lineup into that?
No, it's a continuous investment into upgrading our existing products, building adjacencies. So it's too many to talk about. Yeah.
Okay. Just regarding this Siemens order for this 26,000 crores onto the railways, what is the kind of market share that we can expect, just on a very hypothetical situation, what is that we can expect out of this order, this Siemens order from the railways, sir?
It's very premature to even answer that question. The Siemens first have to make a decision on who they want to work with. There are so many considerations because this is a very complicated and large order with extensive service conditions that go to very long periods of time. So nothing can be stated with certainty at this point in time.
Just some numbers on any kind of market share that we will be having, any idea on it?
Very difficult to say that.
Okay, sir. The same applies to whatever is on the budget allocation towards this railway rolling stock for this 38,000 crores.
It is just a very positive environment, that's all. I mean, we can't convert it into specific business numbers yet. Yeah.
Okay, but on the whole, you expect the railway division to do good comparative to the last year during the FY23 and 24, right, sir?
Yeah, I hope so, yes.
Okay, sir. Then the final question would be on the textile sector. Even on the last Concall, we just discussed that we are facing some difficulties and there are some lower order inquiries towards the textile segment. Can we find any resilience towards that? Is there any, on the inquiry side, is there anything going on the positive side, or we are still maintaining into what we were some 1 quarter or 2 quarters back?
Yeah, we are still at the same situation. I don't think textiles has shown any significant improvement yet.
Okay, sir. When are you at least expecting something to happen towards that segment, sir?
Oh, I wish I had that crystal ball to make that statement. Every time we speak to people, our customers in the industry, they used to say next quarter. Now they've said it so often. Now when we go and ask them, they say we don't know. So
Okay.
it's the uncertain period that they're going through.
Okay, sir. Thank you, sir.
Thank you. We have our next question from the line of Manish Goyal, an individual investor. Please go ahead.
Thank you so much.
Hi Manish, how are you?
Good, sir. Hope you are doing well. You continue to surprise us positively.
That's a good thing, isn't it?
Yeah. Yes, sir. Just a couple of questions. One on the international business, which probably if I just put the numbers based on your revenue share, we have seen roughly 30% growth. So is it largely contributed? You did allude to various geographies, but looks like that it's largely coming from Europe and North America. And you also mentioned that there are a lot of economic challenges and still things look good. So just wanted to get your perspective. What's driving it? Any more? And also you mentioned that in the coming year you expecting a significant volume growth in Europe. So maybe if you can elaborate on that as well. Thank you.
So outside of India has not just been in Europe and the US. All our geographies have grown quite well. That's point number one. But within that, Europe and America have had a disproportionately higher growth. That's for sure. As far as why they are growing, I can only give you a speculative answer because there is a conundrum in terms of what is published in the press by experts in economics, and then there is the ground reality, right? The expertise in economics talks about energy crisis in Europe, the Ukraine war, the inflation in America, and the possible increase in unemployment in America. So this is really what they are saying, but the ground reality is everyone's growing that. Everyone's investing in business is doing well. Now, this has been going on for not just one quarter, but it's been going on for almost a year, right? So sometimes you wonder whether the people of the world are behaving independent of what economists say they will, right? So so even this is what happened even during COVID. I mean, there were all these doomsday scenarios that were put out by various economists and whoever else, but the world reacted very differently, and citizens of the world reacted very differently. So I don't know whether that's the manifestation here.
Sure.
So that's at some philosophical level, but at the same time, there are things that are happening. For instance, I think all the countries are looking at a lower dependence on China, and part of that strategy is one is China plus one strategy going to other countries, and the other one is also insourcing production. So if you look at in the US, there is investment being made in manufacturing products that they were earlier sourcing from China. So some of the growth and some of our demand for our products probably coming from that. So it's very difficult to say what exactly is going on.
Sure. And on my other question, you did mention that in coming year we would probably want to see strong volume growth in Europe. So
it's not anything exceptional. We are looking at a trajectory of growth, which we have. If you look at the trajectory of our growth of the past few years, that it's the same trajectory that we are maintaining into the future. So it's not like there is something like an inflection that we are looking at, which could set us up to fail and get disappointed. But we have a clear 4 to 5 year track record of consistent growth, and what we are expecting into the next year is following that same trajectory. And the foundation, it's not just that graph, but the underlying things of the number of distributors we have built, number of markets we have built, number of customer installations that we have created, references that we have done, success stories, they're all very robust. So those are the ones that are going to drive it. Yeah.
Sure. And on last call, we had mentioned about the inventory levels going up basically to withstand the supply chain challenges. So how is the situation on that front, number one? Number two, if you can share you did mention we are net cash. So you mentioned that after sale of property in the US, right?
Yeah.
Maybe you can share the numbers that will be helpful.
So the numbers are as of today, Manish, because it's not Q3 numbers. Q3 numbers were that our net debt position was about 120 crores was what our net debt was. And
okay.
Today that position is now zero or maybe marginally positive. So that's really the situation. We sold the property as we have communicated into the thing for about $17 million and dollars. And so the realization for the company is probably around 16 and a half or 17, taxes and brokerage and all that. So that effectively brought the net debt position down to zero, and then in the meantime we have generated some more cash.
Right.
So yes, of course, yeah. And as far as the inventory is concerned, yes, the inventory is still a problem. We need to work on it. We have done some work on it, but nowhere near where it should be, and we are working on multiple initiatives to bring it down. So I'm hoping that in a few months we should be able to extract cash out of the inventory.
Sure. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. We have a question from the line of Priyesh Babaria from Axis Capital. Please go ahead.
Hi, sir. Thank you so much for the opportunity. I just have one question regarding competition scenario in domestic market as well as in international market that you cater to.
So, is there any specific question?
So, how was the competition scenario was there in the past? How it has been shifted, and what is the current scenario?
I think by and large it's the same competitors who are there. They're very strong, highly respected competitors. They keep us on our toes. We learn from them. And we have our own strengths, and we have our own value proposition that we bring to the customer. And therefore, there's nothing significantly changed. Of course, there are in India, the last few years, there are a lot of Chinese manufacturers who make very low cost, low performance, low quality machines. But that is, I'm not asking for any protection, but I'm just saying it is, those prices are just not realistic. But that's the reality, and we are building on some specific strategies that will help us counter that. But that's part of life. I mean, you just take it and try and figure it out. Yeah.
Sure. Thank you so much, sir.
Thank you. A reminder to participants to press star and 1 to ask a question. We have a question from the line of Navin Vijay from NS Capital. Please go ahead.
Good evening, sir. Just wanted to have the contribution from our side to the new Vande Bharat Express, sir?
Sorry? Vande Bharat.
Yeah, Vande Bharat Express.
Well, our compressors are running on the train.
Yeah.
So right now the value of the business is very, very small, not even worth talking about, because it just started production of these trains.
Okay, sir. Thank you. So that was the only question from my side.
Thank you. We have our next question from the line of Bhavin Vitlani from SBI Mutual Fund. Please go ahead.
Good evening, Jay. Congratulations for great numbers.
Thank you, Bhavin. I was wondering where you are hiding all this time.
So, pardon me, I joined in a bit late. See, what has been our growth for the compressor business? What's been our growth in India? And maybe give some color on how has been the movement on the market share. And the reason this question is, we understand that some of your European peers have seen significant increase in their wait period due to inventory issues or supply chain issues. So have we benefited some bit on that?
I don't want to talk about specific percentage of growth in India, Bhavin. That would not be in our interest to reveal that in the call, which is public. But what I can say is, if you look at the performance of our competitors globally, they've grown. I mean, and they've grown pretty significantly. So yes, they've had supply chain challenges, probably a little bit more than us, by virtue of the fact that their scale is much larger. But I think they've been able to get their customers to wait and buy from them. So it's not like there has been an exodus of their customers towards running into our arms. No, that has not happened. Maybe marginally in certain peripheral cases, we have gained share by virtue of being able to deliver quickly. But I wouldn't say that there's a big shift towards us because of availability from LG, no.
Sure. Just a couple of follow-ups here. How has been our growth or progress on the oil-free part of the business, and also the water well, given that we have taken corrective actions on the water well side?
Yeah, so oil-free continues to grow well for us, both in India as well as outside the country. Obviously, the value of our revenue in oil-free is far higher in India than in the international markets. But good traction to get some marquee brands as customers in Europe and in the US. So it's overall a very positive thing, but it's a long haul. We realize that, it's a technically sensitive product. Customers have a lot of apprehension, and there are well-established brands who are preferred brands for that category of compressors. So we have to chip away at it, and that's what we're doing, and we're getting some good results, entries into good customers. So that's on the oil-free side. As far as water well is concerned, I was providing a narrative before you joined. The market is dead. Our product has gained the preferred product position from not being considered. Today, the market and customers think our product is very good and probably the preferred product. So once the market turns, I think we'll be in a good position.
And this last question is, about a year ago that we kind of moved away from pricing at a discount to premiums for pricing at par, or in cases we hear about a premium. Is that sustaining, and are we seeing now that the customer acceptance is at least on our pricing?
Sorry, Bhavin, I didn't get your question. What was your question?
So a few years ago, our product used to be at a discount to some of the international multinational peers, and now we see that it is either at par or in some cases at a premium. Are we able to sustain this, and are we seeing the amount of acceptances from our customer side about the pricing strategy that we have now adopted?
Well, I don't think we are at a premium or anywhere close to being the same as our large multinational competitors. So I think that would be a bit of a wishful thinking. And if somebody is saying it's probably our sales guys and distributors who lost some orders who are saying that that our prices are there. That's not true. By and large, if you look at the average point, we are still at a lower thing, which is fine. I mean, that is the Toyotas of the world and the Hyundais of the world. They took a long time to build their price points to market levels, which is par for the course. That's the nature of the game, which is fine. Yeah, so that's the journey we are at right now.
Sure. This last question from my side is your view on the underlying demand outlook, and pardon me if you've already given, especially in India. Are you seeing the momentum of the demand the same, accelerating or decelerating?
In the last quarter's call, I was saying that there were things that seemed to be slowing down in terms of customers taking longer to finalize. It doesn't seem to be there. Inquiry levels I'm not saying they're going through the roof, but they've not come down. They're continuing down the same pace. So as far as India is concerned, I think it's continuing, right? It's nothing there that is negative. As far as Europe and America, we're still continuing down that same path. Our presence there in those markets is so small, so even if there is a dip in the market, there is enough of an opportunity for us to grow.
Sure. Thanks so much for taking the question. Best wishes.
Sure. Thank you.
Thank you. A reminder to participants to press star and 1 to ask a question. We have a question from the line of Manish Goyal, an individual investor. Please go ahead.
Yeah, sir. Just on other income, which has seen a significant increase at standalone and Concall. So if you can just provide data points as to one-time income and what was the gain from the sale of property and where is it captured? What is the amount? That was number 2. And number 3, at standalone, how much was the dividend income from the subsidiaries? Thanks.
So you seem to be picking up stuff that I don't prepare for, Manish. So anyway, I'll try and answer what all I have in front of me. The property sale did not happen in Q3, so you won't see it in the Q3 numbers. You will see it in our Q4 numbers, but since the sale has already happened, it's 17 million is the sale gross value. The realized value is about 16 something after brokerage and whatever else. So that's on the property in the US. The rest of it is all small stuff that we have sold in India. Ahmedabad we sold. So I don't have the breakup of the value, but these are all bulk of our other income is in that form of what we disposed of.
Sure. Okay. And you won't have the other dividend income number as well at the standalone?
I don't know. Haven't got it. Have we got dividend? Just give me a minute. So we've got about 16 million, which is 16 crores as dividend, from subsidiaries. Yeah.
That
That's not for the quarter. This is for the whole year.
okay. Okay, I know. I was just always you get it from ATS as a dividend.
So it's ATS as well as Addison Precision, which is just holding land and from the sale of the land.
Okay. Thanks, sir. Thank you. I'll take it offline. Thank you so much.
Thank you.
Thank you. We have our next question from the line of Navin Vijay from NS Capital. Please go ahead.
Sir, you have mentioned that you are seeing below par demand level from the textile sector domestically. Just wanted to ask, which sector has surprised you on the positive side? I mean, above par inquiry or order level, some color on that?
So, we are not dependent on any one industrial sector, and that's the good part of this business, because every factory needs compressed air and therefore we supply to all. So there is no one industry vertical that has done disproportionate growth in the year or the quarter.
Thank you, sir.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. Participants who wish to ask a question may please press star and 1 now. As there are no more questions, I now hand the conference over to management for closing comments. Over to you, sir.
Thank you. Thank you all. Thank you, Kamlesh, for hosting this. So it was a pleasure to listen to your questions and try to answer them to the best of our ability. So I really appreciate it. Thank you.
Thank you. On behalf of Asian Market Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
The conference is no longer being recorded.